Renowned billionaire investor Ray Dalio has expressed his worries about the US stock market's excessive valuation, as well as possible political and economic threats to the country. He's issued advisories over rising debt levels, political controversies, and geopolitical unpredictabilities. Keep watching this video to know more about Dalio's apprehensions about the state of the US economy. The founder of Bridgewater Associates and billionaire hedge fund manager Ray Dalio has been a well-known figure in conversations concerning the US economy. He's provided a thorough understanding of his opinions on the matter by sharing his observations and worries throughout the years on the country's economic future. Ray Dalio expresses concern over the US's growing debt as one of the main topics in his analysis of the country's economy. He's issued numerous warnings that the country's current debt levels are unsustainable. Dalio notes that the nation has been racking up significant amounts of both public and private debt, and he thinks that this pattern may eventually cause a financial catastrophe. He frequently stresses that, if not controlled, the continuous rise in debt might have a dire long-term effect on the US economy. Dalio argues that US stocks are still rather pricey. He issued a warning, noting that the US is facing serious political and economic difficulties. During an interview with Cavuto, Coast to Coast, he said, "This is moderately pricey market with risks of interest rates going up more than down." He made the observation that rising interest rates are driving up treasury yields. As a result, investors can now increase their return on investment without taking on more risk. Consequently, there is now less potential excess return from stocks. Dalio voiced anxieties about internal conflicts and external dangers in addition to economic issues. He emphasized the possible risks of strong partisanship and infighting in Congress, pointing to a very risky situation. It is his opinion that the rules are in jeopardy. He foretold over the next year we will have a great political conflict. He believes that in the upcoming years, geopolitical confrontations involving nations like China, along with economic and debt-related problems, would make matters worse. It is noteworthy that Dalio recently predicted a meaningful slowing of the economy and a debt crisis. He called the current state of affairs, which includes record high levels of public debt, rising interest rates, quantitative tightening, political unrest, and strained ties with China and Russia, a perfect storm for the US about a year ago. It makes perfect sense why the seasoned investor continues to exercise caution. Even with the interest rates much higher, the S&P 500 is just around 10% below its peak. Due to this circumstance, equities are now less desirable than bonds, and worries about a possible recession that could affect corporate profitability have increased. Moreover, the firing of House Speaker Kevin McCarthy and recent disputes over the debt ceiling and budget demonstrate how severely divided Washington politics still are. Since the start of the crisis in Ukraine last spring, the US has imposed trade restrictions against China and sanctions on Russia, adding to the already high level of tensions on the international scene. However, Speaker Kevin McCarthy may face potential difficulties as a result of the bill's passing because the Republicans intend to remove him from the office to reach a compromise with Democrats. Congressman Matt Gaetz said on CNN, "I do intend to file a motion to vacate Speaker McCarthy this week. I think we need to rip off the Band-Aid." Ray Dalio, the founder of Bridgewater Associates, also discussed the poor state of the American economy and hinted that there would be a debt crisis in the nation. The statements were made the day after the Senate enacted a last-minute deal to prevent a full government shutdown by extending spending for at least the coming 45 days. In September, the US national debt reached unprecedented heights when it surpassed the staggering $33 trillion threshold. Over the last several years, there has been a notable increase in debt levels, especially after a notable 50% increase in federal spending between 2019 and 2021, as seen by data from the US Department of the Treasury. In an interview, Ray Dalio was cited by Money Control as warning of the potential for an impending debt catastrophe in the US. He expressed his fears about the financial viability of the country by saying that there would be a debt crisis. Moreover, Moody's Investor Service has indicated that it is becoming less confident in the US economy. According to a report by analysis led by William Foster, which is obtained by Bloomberg, the United States institutional governance weaknesses in comparison to other AAA-rated sovereigns would be relegated by a brief government shutdown, even though debt service payments are anticipated to remain unaffected. Moody expressed doubts about the nation's capacity to properly handle its budgetary responsibilities in this assessment. The last-minute proposal does not contain provisions supporting Ukraine, an issue that the White House strongly supports in spite of growing opposition from a faction of GOP legislators. Concurrently, it provides an extra $16 billion for federal disaster assistance, satisfying all of President Joe Biden's funding requests. Government funding is guaranteed by this bill through November 17. The seasoned investor has called attention to America's financial difficulties in the past, citing a massive debt level load, rising interest rates, and quantitative tightening, in addition to political squabbling and tense relations with China and Russia, as a perfect storm for the nation. According to Dalio, excessive debt levels may also produce a balance sheet recession, in which businesses and individuals choose loan repayment above investment and consumption, causing growth to stall. Even more pessimistic predictions have been made by a number of experts who believe that equities and home values will plummet and that a full-blown recession will transpire. Since inflation reached 40-year highs last year and the Federal Reserve raised interest rates from nearly 0 to over 5% during the previous 18 months, their concerns have grown. Elevated interest rates promote frugal spending over consumption and increase the cost of borrowing, hence mitigating price inflation. However, they can also kill demand, overall spark recessions by driving down house values, crushing the appeal of riskier assets like stocks by hiking bond yields, and crushing debt-ridden sectors like commercial real estate. In addition, Dalio talks about how a crucial component of his investing technique is comprehending the workings of the economic system. He describes his framework, which he refers to as the economic principles in his book, Principles, Life and Work. The long-term debt cycle, inflation and productivity are some of the ideas covered by this paradigm. Dalio has also highlighted the importance of long-term debt cycle. He contends lengthy debt cycles, usually lasting many decades, occur in economies. Dalio's emphasis on the Federal Reserve's role in controlling economic cycles is another important component of his economic approach. In his view, managing economic downturns and reining in inflation are crucial tasks for central banks. Dalio has kept a careful eye on the Federal Reserve's operations, especially with regard to monetary policy decisions and initiatives to either chill or stimulate the economy. Apart from his apprehensions over debt and economic cycles, Dalio is known for advocating for portfolio diversification and risk management. In order to endure market volatility and economic turmoil, he frequently counsels investors to maintain a well-diversified and balanced portfolio. His company, Bridgewater Associates, is well known for using techniques like risk parity, investing, and emphasizing risk management. One of Dalio's worries, as he expressed to Bloomberg's David Weston, is that there might not be enough consumers to handle the surge of government debt coming onto the market. By the end of 2023, the US Treasury is anticipated to issue more than $1 trillion in T-bills as the government aims to increase its cash reserves after a last-minute agreement to raise the debt ceiling. Additionally, Dalio voiced his worries about the US economy is being affected by political polarization. He maintained that there are economic concerns associated with the current political polarization. He said that the creation of a strong middle ground would see the best course of action for the political system as well as the economy. Dalio believed that it would be possible to remain in exile. Little left or small right maintain extreme control. He observed that the political environment was becoming more fragmented as a result of this circumstance. Geographically, he emphasized the tendency of individuals to move various places as a result of differences in ideals, creating a discernible divide to the populace. These warnings of Ray Dalio certainly serve as a reminder to the investor community. Leave your insights into our comment section down below. Do not forget to click like, share, and subscribe to our channel.